It is 13F season, which means that all of the legendary investors are updating the public with what they have been buying and selling in the stock market for the first quarter of 2023. So in today's video, we are going to be going over Warren Buffett's portfolio, the Berkshire Hathaway portfolio, and analyzing what he has been buying. So we're going to be going over everything you need to know, but this video is going to be focusing on the stocks that he has been buying, and we're kind of going to do a little bit of a rapid fire on why I think that he is buying them and doing some really quick analysis. So with that being said, let's dive into what Warren Buffett and Berkshire Hathaway have been buying. Now, right away, we can see that the first stock that he has been buying, the highest one in terms of the percent growth to the position, is HPQ. Then Occidental Petroleum, Apple, Bank of America, which is super interesting because there was the banking sector crisis going on down in the United States. And in Berkshire Hathaway's annual meeting, Warren Buffett basically said that he sold off other banks down here like Bank of New York Mellon and US Bank Corp because he wasn't totally convinced in their long-term potential anymore. But he did say that not all banks are the same. And therefore, there are some banks that are still fundamentally sound, but there are those that are at a much higher risk right now, essentially. So it looks like Bank of America is one of those bank stocks that he is happy to hold, and he is increasing his position. And Bank of America is actually the second largest position in the overall Berkshire Hathaway portfolio, making up over 9% of the portfolio now. But at the same time, he is selling off those lower quality banks, essentially, which I thought was super interesting to see. Now, the next stock that he has been adding to is Markel Corp. This is like the Canadian Berkshire Hathaway. That's basically what people call it. And it looks like Warren Buffett and Berkshire Hathaway are just increasing their position in this one as well. Now, moving on, the next stock is Citigroup. So they are buying another bank, which is, Citigroup. It's another massive US bank. Next stock they've added is Paramount Global. This is one that I honestly don't really know why they are adding Paramount Global. We'll take a quick look at it, but in my opinion, the fundamentals of this business don't really look that attractive at all. So I'm not quite sure why Berkshire is buying Paramount, but let me know down in the comments what you think. Next stock is Capital One Financial. This is like another bank. Then Diageo, which is interesting because this is an alcohol company. So it looks like Berkshire is officially invested in an alcohol business. And then Vitesse Energy. This is a small cap energy company, and it looks like they purchased quite a large position in it relative to its market cap. This company has like a $600 million market cap. Now, let's take a look at what they have been trimming. They've been trimming Amazon, Aon, Ally Financial, Activision, Celancy Corp, Chevron, McKesson, General Motors, Bank of New Mellon Corp. They've totally sold out of. RH, they've totally sold out of, and I believe they actually took a loss on this position. They also totally sold out of Taiwan Semiconductor. This one is super interesting because Berkshire purchased TSM not that long ago. And then in the Berkshire Hathaway meeting, Warren Buffett basically said that he thought about this position more and the geopolitical risks with China potentially invading Taiwan. He thought about it and decided that that was a risk he didn't really want in the portfolio. So it was a quick switch in the decision to buy this stock and then ultimately sell it. But he did have to sell it because it sounded like it was causing him quite a bit of stress with all of the developments going on over in Taiwan. And then US Bank Corp, again, they completely sold out of. So overall, that is the different changes to the Berkshire Hathaway portfolio this quarter. So now let's dive into the stock specifically. And let's start off with the top with HPQ. Now, what's interesting about HPQ is I think that this one is more of a pure play value investment. If we actually take a look at their income statement here over about the past 5 to 6 years, the revenue hasn't really grown. And if we actually take a look at the most recent quarters, the revenue has been coming down. If we now move over to the cash flow statement and take a look at the operating cash flow, we can also see that the cash from operating activities has been declining in the most recent quarters. So not typically what I would like to see from an investment, some declining revenue and operating cash flow growth, but take a look at this. This is HPQ's shares outstanding over time. And this company buys back a ridiculous amount of its shares every single year. On a compounded annual basis, it buys back about 7 to 8% of its shares every single year with the cash flow that the business generates. And then on top of that, if we go back over to the dividend yield, it's about 3.53%. So what I'm going to do is head over to Stock Unlock's freeform tool right here, and we're going to take a look at the percent return to shareholders, which is a combination of the dividends paid and the share buybacks that the company has done over the past year relative to the market cap. And we can see that HPQ in the trailing 12 months has returned 13.4% back to its shareholders. So yes, this business isn't really growing right now, but it doesn't really look like the business needs to grow to deliver a substantial amount of money back to its shareholders. And Warren Buffett likes to focus on asking the question of how much cash can this business return to him. And with HPQ's case, it's about 13.4% over the past year. So I don't think that he's really buying the stock for like a massive growth play. I think that he's buying the stock because they're just returning a ton of cash back to shareholders. And all the business needs to do is just keep that up. And it must be that he believes they can. Now, moving on to the next stock, we are going to take a look at Occidental Petroleum. This is a stock that Warren Buffett has been buying consistently over the past few quarters, and it's a massive oil company. If we take a look, the price to free cash flow right now is only 4.6, which means that it has a free cash flow yield of 21.8%. So if Occidental Petroleum wanted to return 100% of its free cash flow to shareholders, then it could pay out about a 22% dividend right now. It's an absolute free cash flow machine. And what's interesting about this business as well is if we head over to the cash flow statement and we go to the trailing 12 months, and let me just zoom in for everyone. So right here, we can see that in the trailing 12 months, the company produced about $16.4 billion in operating cash flow. And then for me, I'm always like, okay, well, what are they doing with this operating cash flow? So we can see they spent about $5.1 billion on CapEx. So they have about $11.3 billion left of free cash flow. And then we can see that they spent about $6.2 billion paying back debt, $3.5 billion buying back shares, and then $1.3 billion on paying out the dividend. So what Occidental is doing right now with its cash flow is mostly paying off its debt and trying to clean up the balance sheet. And if we go over to the company's balance sheet actually, and we scroll down to their long-term debt right here, we can see that the long-term debt has been dropping massively. In the third quarter of 2019, it was sitting at about 48 billion, and in the most recent quarter now, it's sitting at 19.65 billion. So what Occidental Petroleum is doing is they are using their cash flow to clean up their balance sheet, get rid of their debt, and then once their debt is down to a more realistic level of where the business wants it to be over the long term, then what they're going to do is instead of paying off the debt so rapidly and spending, $6 billion on paying off debt, they're going to instead return that cash to shareholders through a dividend or buying back shares. Warren Buffett knows this, and he likes this capital allocation plan from the company, and I believe that is why he is invested in the stock. So yeah, it's not a massive dividend stock yet, and they're not even really buying back that many shares, but it is a free cash flow machine with that 22% yield. And when the debt is paid off, more of this 22% yield is going to find its way back into shareholders' pockets. And I think that is why Warren Buffett is ultimately invested in the stock for the long term. Now, moving on to the next stock, this is Apple. Apple is a stock that I have been talking about on my channel consistently over the last little bit, because personally, I think that this stock is quite expensive right now, and I am a little bit pessimistic on Apple's returns over the next 5 to 10 years. Now, keep in mind that this 13F that Warren Buffett just filed is for the first quarter of 2023. So it ended in March 31st of 2023, this year. And if we take a look at Apple's price to free cash flow, we can actually see that right here, right around the beginning of the first quarter, it was selling for a price to free cash flow of about 21, which I think is much more realistic and much more opportunistic to be buying this stock at. Who knows? Warren Buffett could have been buying Apple shares around the beginning of the year when the price ratios were quite a bit lower. When I first saw this 13F, I was kind of surprised to see Warren Buffett buying more Apple shares because its price to free cash flow right now is sitting at 27.8, which is right around the highest the price ratios for this business have ever been. So I think that Apple is quite an expensive company right now, especially when we consider that Apple's revenues right now are declining, and so is its cash flows. If we take a look at its operating cash flow right here, operating cash flow is also declining, and free cash flow, I believe, is declining at a faster rate. Let's just take a quick look. About the same as operating cash flow, actually. But basically, what I'm noticing for Apple is the company is selling for right around its all-time high price to free cash flow multiple of nearly 28, at the same time as the revenue is declining and at the same time as cash flow is declining. That is just ultimately leading me to decide or come to the conclusion that Apple is a quite expensive stock right now, and that is why I think that the returns that the stock is going to offer over the next 5 to 10 years is probably not going to match the market or really be that significant. That's just my own opinion, and that's why I am not buying Apple. But in terms of Warren Buffett, again, he could have been buying it around here when it was closer to 20 instead of this higher 28 price to free cash flow ratio. Now, moving on to the next stock. This is Bank of America, BAC. Obviously, he is buying bank stocks while, the banking crisis is going on. If we take a look at Bank of America, this stock is actually down about 44% from its all-time highs now. and it's in a pretty massive correction. But if we go and take a look at the company's financials and we go to the income statement, and let's zoom out to about 2012, 2013, and we can see that the company's revenue is actually at a decade high. And if we take a look at the most recent quarter, the last quarter, the company also produced a record amount of revenue over the past 10 years, relative to the past 10 years. If we go down and take a look at the net income in the trailing 12 months, it has been coming down since it peaked in 2021 when they reported about 30.6 billion, but the company is still producing $27 billion of net income right now. And then let's go back to the general tab, which means that it's selling for a price to earnings ratio of only 8.05, which also means that it has an earnings yield of 12.4%. So I think that Warren Buffett is buying this stock as well because it's in a massive correction and it's offering investors a pretty nice yield of over 12%. Let's actually head over to our stock unlock freeform tool. Let's get rid of Apple. We're going to put in Bank of America, and we're going to go to the price to earnings ratio of this business over the past about 10 years. And we can see that the average price to earnings ratio has been 15, the median has been 12.6, and the latest is about 8. So this company is trading well below its historical average price to earnings ratios, and it's growing its dividend, I believe, at something like 20% per year on a compounded basis, and it's buying back shares at the same time. So it's taking that 12% earnings yield and it's paying out a dividend and buying back shares for shareholders as well. And it's just delivering cash back to shareholders that way. So it's another stock where I think Warren Buffett is buying it because the business doesn't even really need to grow to deliver an above 10% return for him. All they got to do is just maintain the existing business right now over the long term, and it can deliver that 10% to shareholders. Now, Markle Corp, this is a pretty in-depth company. I'm not going to talk about this one just because it is confusing. It's basically like the Canadian Berkshire Hathaway, as I said. So he's adding that position. So let's move on to Citigroup and go and take a look at this stock. So right here, we can see that Citigroup is currently in a correction of about 43% as well. This is another massive bank. This one currently has a price to earnings ratio of 6.34, which means it has an earnings yield of 15.8%, almost 16%. And if we go and take a look at this company's financials really quick, we take a look at the total revenue, we can see that it's kind of like Bank of America. The revenue is just steady. It is at a slight high right now, but it's not growing super quickly. If we also take a look at the earnings kind of topped out here in 2021, but they have come down since then. So it's not really a growth stock either. This is very much so just another value investment for Warren Buffett, in my opinion. It's another stock that doesn't really need to grow. All it needs to do is maintain its existing business, and it will be able to deliver about 16% back to shareholders through buying back shares and paying out a 4.5% dividend. If we actually head over to this company's income statement and take a look at their shares outstanding over time, we can see that the company has been consistently buying back shares. And since 2014, the shares have dropped from 3.1 million all the way down to 1.96 million. So just over the past about 9 years, they've repurchased 33% of the shares outstanding, which is a significant amount of capital returned to shareholders, again, on top of that 4.5% dividend. Those are the reasons why I think he's buying that one. Now, Paramount Global, this one is interesting. I have no idea why Warren Buffett and Berkshire are buying this stock. Like, go and take a look at this. Let's go to Paramount Global. Let's go over to Stock Unlock's insight scores here. And we can see that it's only 2.09, which is bad. And Paramount Global has negative free cash flow of nearly $1 billion. Also, it does have a good balance sheet with a cash runway of 27 months. So it's not really in any financial stress right now. But the revenue is not really growing. Gross profits are decreasing. Operating income is decreasing. Net income is decreasing. Operating cash flow is decreasing. Free cash flow decreasing. Book value decreasing. And tangible book value decreasing. So this company's growth scores are not really that attractive. If we also go down to the profitability score, it's only 1.71, which is not very high at all. Gross margin is 28%, operating margin 2%, net margin negative, free cash flow margin negative. It's unprofitable, free cash flow negative, nearly $1 billion. And its operations haven't produced any cash over the past year. The operations have lost about $560 million. ROIC is low, ROCE is low, return on equity is negative, and return on assets is also negative. When I take a look at this business, it's not really growing and it's not really profitable. So I am quite surprised that Berkshire continues to buy Paramount Global. So again, let me know what you guys think down in the comment section below, because this one's just interesting. It's also paying a dividend while the company is losing money, which is kind of a red flag for me as well. Yeah, just kind of confused on that one. But anyways, we're going to move on to the last stock we're going to analyze here, which is COF, Capital One Financial Corp. Again, this one is like a bank. So you can see that Berkshire Hathaway is clearly buying financials this quarter. Bank of America, Citigroup, and Capital One Financial Corp. This company is down 51% from its all-time highs in a pretty massive correction. 2.64% dividend, 6.23 price to earnings ratio, which means a 16.05% earnings yield. Now, if we go to the financials of this business, take a look at its total revenue, we can see that the revenue is actually sitting at an all-time high, sitting at $35 billion in the trailing 12 months. However, the net income has been coming down over the most recent quarters, since about the third quarter of 2021, actually, and it's dropped by about $7 billion. Now, if we take a look at why that is, this is because the company's loan loss provisions went from about $6 billion to negative $2 billion, all the way back up to about $8 billion. So when the company has a negative loan loss provisions, that is added directly to the company's net income as earnings, which means that this is kind of like an artificial pump or boost to the company's earnings. And now things look like they are kind of normalizing. So it looks like, the company can still produce about $5.6 billion in earnings right now. And if we go over to the cash flow statement, we can see that the dividends paid are about $1.16 billion, and the company is also buying back about $2.4 billion worth of stock on an annual basis, which is a total return to shareholders of about $3.5 billion on a market cap of $35 billion. That means that the company is returning about 10% to shareholders on an annual basis right now through that dividend and through buying back shares. And again, they still have that earnings yield of 16.5%, and they're returning about 10% of that to shareholders. This is just another one. This is just another value investment that I think Berkshire is capitalizing on. And I think that they are clearly taking advantage of the weakness in the financial sector right now. These all just kind of look like they're value investments. I'm not really seeing that many growth investments here. I just think that Berkshire Hathaway is buying stocks that can deliver 10% to them from the organic cash that the businesses generate, and they believe that they are going to continue doing so in the future. But yeah, that's pretty much going to wrap up the video, everyone. Let me know what you think down in the comment section below, especially regarding Paramount Global. And if you enjoyed this video, then please remember to leave a like on it. It really helps out the channel, and I really appreciate it. Also, if you are interested in this platform that I use here on my channel, which is Stock Unlock, you can get a 25% discount on this platform in perpetuity, which basically means that if you go and get this discount right now, then for the remainder of your subscription, that discount will be applied. It's not going to end. So if you are interested in Stock Unlock and you've been waiting, or you want to save some money on the platform, then go and make an account and then go to the checkout section, and you should have an automatic 25% discount applied at checkout, and go and take advantage of that. This is a fantastic fundamental analysis platform that is 100% focused on the fundamentals of the businesses and not on speculating or gambling in the stock market at all, as you can see from just me using it. Go and get your 25% off now. I will put a link at the top of the description, and I hope you guys enjoy that little discount offer for you. Also, if you're new here, please consider subscribing to the channel. I really appreciate that as well. But with all that being said, thank you again so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.